Good afternoon, everybody, and welcome to another episode of How to Invest in Cannabis. Today, I'm your host, Jordan Youkilis, one of the founding partners of Key Investment Partners. And with me, I have Sam Scanlan as our guest from Houlihan Lokey. Sam is a senior vice president at Houlihan Lokey on the food, consumer, and retail group, and has been in charge of scaling and working for their cannabis investment banking practice. So, Sam, thank you so much for taking the time to join us on the podcast today.
Yeah, no, thank you, Jordan, and looking forward to the discussion and happy to be on. So thanks.
Absolutely. So maybe just to kick things off, would love to learn a little bit more about your background, your educational background, and then how you went through your career to get to Houlihan.
Yeah, sure. So I'm a native New Yorker, so I'm based out of our New York office. Did undergrad at Johns Hopkins, where more people become doctors than investment bankers, but there are a few of us out there. I started my career off actually for Booz Allen Hamilton, a large government consulting firm doing military work, and really cut my teeth there in terms of, really problem solving and analytical skills. And, I sort of refer to myself as a recovering consultant. And from there went to NYU Stern, which is where I started working at Houlihan as a summer intern and have been here ever since. My entire career has been spent here doing M&A, first as a generalist, and then, over the last year and a half, heading up our industry vertical in cannabis. And so, one of the unique things is I'm not just an industry coverage banker, I'm a technical banker. And that's how, we're orged within the middle market. And so it's an exciting space for us. And we're looking forward to, being a part of the next phase of it.
Fantastic. And as you talk about being a part of the next phase, I know we've discussed previously that cannabis wasn't always a sector that Houlihan could participate in. And even still today, there are certain types of work that you can't do with plant touching businesses. So would love to just learn a little bit more about how the cannabis sector within Houlihan has evolved over time and what sectors you guys are willing to work in today.
Sure. Yeah. So, obviously, I think in the early days of cannabis, what was happening in the markets was all IPOs and public equity in Canada. That's not really who we are as a firm. So it wasn't really worth even addressing some of the regulatory issues. But, you fast forward a couple years ago and all of a sudden, you started seeing a lot of consolidation, a lot of M&A activity, and that's only picked up, since, after Labor Day of 2020. And that's really why we got into the industry. It's always an investment. You can't show up on day one and start doing deals. And so, we're a publicly traded broker dealer, so we've got our own legal issues just like everybody else that we're working through. But it was important for us to get to really know the industry and clients. And so, we've sort of had three areas where we were cleared to do anything, which is, obviously in Canada. Hemp CBD, which has had its own challenges as a market. And then obviously in the kind of emerging ancillary sector, the service businesses that support to cannabis companies that can't get it elsewhere. And then obviously plant touching, we're limited. We can't do work out of our broker dealer, so no M&A or capital markets yet. I hope to change that imminently within the next weeks or months here. Obviously, a lot of tailwinds in the industry. And that's changing for us. We do work for plant touching companies in terms of our valuation group. So it's not my practice area, but I do partner with my valuation team to do equity reorgs, QOV work, purchase price accounting, anything like that. That's considered more internal and we do outside of our broker dealer. And so that's helped us get to know a bunch of people in the space. I think it's helped us get a lot smarter because you can't just run, you actually have to look, smell, and touch things a little bit. And so that's been good for us. But, I was obviously put in my role to do M&A in the space. So we're eager to be able to do more of that.
Fantastic. Well, it's exciting to hear that, internally you guys have been able to access more and more subsectors within cannabis. And I think that's, broadly a trend that we're seeing across the investment banking and asset management sectors within cannabis.
Yeah, and it's been an evolution too. I mean, there were certain parts of the ancillary market that we weren't comfortable with at the beginning if it was promotional. There were certain services within our valuation group that we weren't comfortable with, i.e. QOVs. And so it's been an evolution, and we've got one more step to go. Obviously, the elections helped all that. Things like safe banking, don't solve problems, but every little bit starts kind of pushing it over the edge. So
yeah, absolutely. That makes sense. And would love to kind of come back on safe banking and what that's going to look like. But before we get into that, as you're seeing a whole bunch of deal flow, and I'd have to imagine you're seeing more, probably significantly more companies looking to enlist your services to help raise capital than you're actually able to on board. And so we'd just love to get your thoughts on, where you're seeing some of the best growth areas within cannabis today and a lot of interest from investors for those sectors as well.
Yeah, sure. I mean, look, there's no shortage of people that are looking to do things, whether that's raising capital, which is something that's a little earlier stage than what our capital markets group does. But we're in the business of helping people with advice. So there are ways to kind of help guide them without actually being in front of a capital raise. Where we're seeing the activity, we're really seeing a bifurcation. And the best operators in the best states are getting a ton of interest. They're getting very profitable, and ultimately that's leading toward a lot of M&A. I mean, you've seen the surge of M&A in Massachusetts. You've seen, pockets in Pennsylvania that have been very active, in Arizona, and then, Illinois, and you're going to continue to see that. Because we're talking to entrepreneurs and private companies every day that are looking for somebody to help them navigate the market. And I like to say the market for corporate control in cannabis is only getting more crowded. When you see Ascend, Verano, and Parallel entering the public markets, and there'll be more that come over the next 6 to 12 months, that really changes the landscape. And so it's exciting, but you're also seeing California do a lot better, and you're starting to see activity there, and we expect to see a lot more. It's the biggest cannabis market in the world. And then you look a little bit at the ancillary side of the market, and what you're seeing is big splashy deals, like Dutchy. You're seeing some of the more MarTech platforms are doing really well, and some of the more specialty areas, but there are parts of the market that are kind of a little bit softer because, in the ancillary market, you've got to make the business case that you can be, you have the right moat, to be able to fend off the traditional strategics when they all enter the market, just like, with service providers and everything else. Us as banks, the law firms are going to have to deal with the same thing. And, I think there is a way to build a competitive moat, and there are some really great companies out there. And then there are some that are going to struggle if the competition opens up. And so, but I also say it's dynamic. Companies that were considered to be the greatest thing a year ago, all of a sudden people start to question things, or things that were considered commodities are starting to become value add. Like we've seen that on the lighting side a little bit, where it's not just about putting up racks of lighting; it's about control systems and technology and LED and different spectrums that can grow your cannabis better. And it just kind of speaks to the broader, innovation that's happening in the industry as it grows up, which is just exciting to see every day.
Yeah, absolutely. It's exciting to see every day. And, I think it's a really good point you bring up about how sectors and companies that were once loved a year ago are total opposite today, or vice versa. Sectors that maybe were a little bit overlooked are starting to get more interesting. And I think it's also a function, one, obviously, most of these companies are very early stage, and so execution is everything. But I think it's also endemic of the fact that cannabis is such a fast moving industry. Regulations change quickly and can have incredibly meaningful impacts to these companies, profitability and ability to generate revenues. So it makes sense that, there can be quite some fast transitions that happen within the industry.
Yeah, no, it is. And that's part of the excitement, right? I mean, I joke around with people that one of my favorite aspects of this industry is you could pull 10 different smart people in the industry, and I guarantee you're going to get at least 7 or 8 different opinions. And I don't just mean different opinions. I mean, opinions going completely in opposite directions. And that's a lot of fun, especially when, your craft is M&A, which is all about strategy and disruption and being ahead of the market. And so, that's the exciting part.
Very exciting. So we'd love to talk a little bit about who's actually deploying capital into cannabis today. I mean, what have you seen in terms of the investor makeup, particularly I'd say since the November election with the blue wave and it being increasingly apparent that cannabis legalization is imminent? Have you seen more institutional investors coming into the sector, or are you still seeing it predominantly being driven by high net worth individuals and family offices?
Yeah, I think it's still being driven by the same, high net worth and family offices, and then also just some of the private pools of capital within cannabis, that have grown, like folks like yourselves, so, but I kind of look at it as money's kind of leaking in, right? And so it's not really a tsunami yet. It's really just people crossing the picket fence, so to speak. And I think there is some institutional capital, but I think it all depends on how you define institutional capital, right? I mean, it's not Fidelities and BlackRocks of the world. It's smaller credit funds that are starting to look at the space. It's smaller institutions that are starting to do it, or frankly, just more high net worth individuals. And we've seen traditional pockets of private equity firms that are eager to get into it and have their own unique dynamics where they actually can. They obviously have LP issues, which obviously you guys are familiar with your background. But it's sort of like there are two main issues there, right? The hurdle is not just regulatory and being comfortable investing in this sector given the federal dynamics. It's also getting comfortable with the valuation. You can't just sort of show up and sign a deal in 60 days in this industry if you haven't been in it, because the complexity is so significant. It varies in every state ecosystem. It varies across companies, and it's just it's hard for people to get their hands around valuing something at 10x forward revenue. It just obviously in the cannabis market that those types of numbers have been seen for certain types of businesses, and the growth in the industry has supported it, but it requires what I'd call kind of an education that takes time. I was talking to a pretty significant cannabis operator who has been able to get some more institutional capital, like more on the more on the family office institutional side, I would say. And they said they've been courting these people for years. And so, one of the things that we do in the market is we're always talking to our traditional guys about, do you want to talk about cannabis? Do you want to start getting in there? And we're starting to push them and educate them to kind of get them over the line. But it's still going to take a little bit of time, and we haven't gotten a watershed moment yet.
Sure. And that's an interesting point. On the watershed moment, I'd be curious to get your thoughts, drilling in a little bit to your comment about traditional private equity, right? And so for listeners, to give them a little bit more context, to think about, the traditional private equity players of the world historically have not invested in cannabis, most likely given the regulatory dynamics, but additionally, most of these large institutional private equity funds have what are called vice clause restrictions placed by their underlying LPs, which say they can't invest in any quote unquote sin-related industry, cannabis obviously included, meaning that even post-legalization, theoretically, they wouldn't be able to invest. Now, I think that obviously the exact provisions are different firm to firm, and some have a higher risk tolerance than others. But I think our read internally is that once you see one of these blue chip type private equity firms purchase a cannabis company, most likely it'll first be an ancillary business, but we could see a plant touching business as well. And it seems to us, as we talk to colleagues from our past lives in the traditional finance world, it sounds like a lot of folks are kind of just waiting for a firm to be the first mover, and then that's really going to be the green light that lets a lot of other private equity firms come into the space. And I'm curious to get your thoughts on if you think that's an accurate read or not.
Yeah, look, I think at the end of the day, there are all different types of private equity firms, right? The mega funds, the middle market funds, growth funds, all different types. And I definitely think once you see one or two go, a lot will come, but a bunch of them just won't. The larger funds, are writing check sizes north of $1 billion on everything. So, I think somebody made a joke to me the other day that, I don't know, Blackstone could just buy the industry. But, in the middle market, funds, 2 billion and under, those check sizes could be meaningful. And some of it will have it in their DNA to be trailblazers, and others won't. But, they invest in beverage alcohol, although not everybody in, the industry does, but in general, they'll stay away from tobacco. Some will do some firearm stuff, which also falls into that category. So it'll be interesting to see if they sort of take the beverage alcohol approach or they take more of the tobacco approach. We'll just kind of have to see how things evolve. But at some point in time, they're in the business of putting capital to work in value-added ways with return profiles, and so those that jump over the line, frankly, are going to reap the rewards first. My personal thesis is actually that I think some of the credit opportunity funds out there that have been doing debt lending might actually be the first ones to cross over before the equity guys. And part of that thesis stems from, you don't have to worry about the valuation. Right? I mean, you can take warrants as part of the deal if you want, with a lower coupon so you get upside or something, but that market's become very crowded and folks are finding it hard to differentiate themselves in it. But in the cannabis market, they can get a much greater alpha by doing that. So I think that's going to be an interesting dynamic that, we want to see how that evolves. Sure.
No, I think that's a great point. We're seeing some fantastic opportunities on the credit side as well. I mean, especially from a risk-adjusted perspective. I mean, GTI, I think, recently raised debt at a 7% interest, which was well better than pretty much anyone else of their peers have been able to do. But even still, you think about GTI's revenues, their profitability, the collateral of their assets. I mean, 7% would be astronomical if they were in any other industry, right?
Yeah. I mean, if forget even just an asset coverage, I mean, that's 1x EBITDA. It's less than 1x EBITDA.
Yeah.
And obviously EBITDA in the industry with 280E is a little bit different, but still, that's somebody who's got real free cash flow for it. So it's going to be interesting, because let's put it this way, for that type of deal in a traditional market, pricing would be 3% or something. So, guys in traditional markets would very happily, lever them up to get a 8-9% return, which is way less than, what you see, in other types of deals out there. So,
yeah, absolutely. And then wanted to drill down a little bit about what you were talking about with regards to, the Blackstones and the KKRs of the world needing to deploy, call it $1 billion equity checks in the market. Frankly, there's just not that many companies of that size quite yet, right? So that's certainly an inherent barrier to them getting into the market yet today. Would love to get your thoughts on the sell side as well, right? So obviously, before Houlihan and some other middle market banks got into cannabis, the industry was really run from a sell side perspective by by mom and pop brokers, kind of boutique bankers that were willing to get in early. Now you've seen Houlihan and some of your more direct competitors get into the space, but we really haven't seen any of the bulge bracket banks like the Goldmans and the Morgan Stanleys of the world get in yet. So I'm curious what you think will be the driver that causes them to get in, and when you'll see competition from those folks.
Yeah. So, I mean, I think, it's one of those things where it gets back to the same comment around private equity. I think you'll see middle market guys get into it first. And a lot of it has to do with, it's going to move the needle for them. They're also not as large organizations. They can be a little bit more nimble about making decisions, because at the end of the day, you got to make a conscious decision to take on the risk. I'm sure they'll all enter the space as soon as federal legalization happens, but, I'd love to know somebody who's got that crystal ball to tell us when that's going to happen. Because I don't think it's happening within the next 5 years. Some people may disagree, but that's sort of the obvious hurdle. But at the end of the day, it comes down to a business case, right? I mean, if you're passing up on a significant amount of business in a sector where you could be doing things, then it's very different. And I think the first thing for larger firms is going to be being traded on, had to have the larger cannabis firms traded on public exchanges. I think that's, until that happens, they're just going to kind of be on the sidelines. But it really just depends on where the activity in the marketplace is. we in our regular way business don't compete with the larger firms in general. We're middle market focused. It's one of the reasons why we actually think we're incredibly well suited for the industry, because the needs of those client bases are very different than a more corporate culture and everything else. And so, I think it's just a function of where the opportunity is, because if the opportunity is not there and not significant, it's not worth the brain damage of frankly having to make some legal risk decisions.
Yep. That makes total sense. And I think, as you think about that legal risk, I know we've previously talked about there's the actual risk of the industry and the perceived risk of the industry. And it does seem that over time, as you see more states legalize, more momentum at the federal level, the blue wave obviously helping that momentum, the perceived risk has certainly come down pretty dramatically. So, you'll likely see more coming in over time. But I think to your point, for really those bulge bracket banks to make a move, you're probably going to need to see some major regulatory milestones like federal legalization.
Yeah, and I also think you're going to see a little bit more of, because at this point, most of us will agree the risk is theoretical, right? Enough stuff has been happening, and nobody's nobody's going to jail or getting prosecuted for being in this industry. It would help to have, something like the Cole memo reinstated, obviously. But the risk I think the larger firms are going to have is the reputational risk. I think that's sort of why you've seen that on the law firm side too. That's why I think the large law firms, frankly, are advising folks on the risks in the space, but they don't want to work with the companies, and it has nothing to do with a risk for them. They view it as a reputational risk. And so I don't know this firsthand, but I would surmise that's probably a similar issue at bulge brackets. And having a balance sheet also adds an additional layer of federal regulation, whatever. We're an independent advisory shop, and so that kind of works to our favor, as it does to some of my peers that have focused on the space as well. Doesn't solve everything, but I think it gives us a little bit of a leg up.
Sure, absolutely. And so would love to learn a little bit more about which specific sectors, you're seeing the biggest funding gaps within the industry, right? Is it debt or equity? Is it on the ancillary, the plant touching side, private versus public? Just would love to get your thoughts more broadly on that sense.
Yeah, so I mean, I think there's a funding gap for everybody. I think some are able to fill it better than others.
Yeah.
And it gets back to my point of it. There's almost kind of like a bifurcation in the market, right? And so, the larger public guys that are generating real free cash flow, it's easier for people to get comfortable with that, because it's a publicly traded company and you see it. So we definitely see more trouble on the private side in terms of funding, just because if you're doing rounds, it's hard to stack up $20 million, $1 million at a time, if you can even get that. And so that's been a challenge for the private guys. And I think that's why you're seeing more people go public, and more people looking to sell out, because at some point, if you don't have the public currency, it's harder for you to acquire and gain the scale you need in your markets, right? And that's a common theme you're seeing in the market. I actually see the debt side funding gap getting bridged a little more so than the equity side. Interestingly, you're starting to see more proper, BDCs out there. AFC Gamma, obviously, you see the money that they've raised, or IIPR. And so there's a lot of money flowing into that side, because I think the folks that are backing that understand that there's real asset value and they're covered. Whereas on the equity side, you got to get comfortable with very high valuation multiples. So I actually see it closing on that side more, but it's really turning into a haves and have-nots. Those that have great businesses are finding it very easy to fund themselves, partially internally. But, if you think about states like New York and New Jersey coming online, if you talk to the major operators in those states, the amount of capital that's going to be required to build those out, you're talking hundreds of millions of dollars to be able to do that. And so, those numbers aren't flowing into the industry just yet. And so there's still a funding gap for sure, but it's definitely bifurcated into haves and have-nots. So
yeah, well, that makes sense. And I'm curious to get your thoughts on the CSE, which is the Canadian Securities Exchange, for folks who aren't familiar. the CSE is actually a public exchange up in Canada that a lot of cannabis companies turned to predominantly, I'd say 2017 to 2019 timeframe as a way to access capital because private equity in cannabis was so scarce, especially at that time. And so what we've seen is that, a lot of folks who went on the CSE maybe frankly regretted that decision just because there's less liquidity on the CSE and it can, create some confusion in the story. So I'm just curious if you're still seeing a lot of folks turning to the CSE or instead trying to really just build out their platform and waiting until federal legalization occurs so that they can list on the NYSE or the NASDAQ.
Yeah, I mean, I think it really depends on the facts and circumstances, right? I mean, I think everybody agrees that the CSE is not a ideal exchange to be housing these companies. And, I've seen private operators who say, you know what, I have the capital I need and I have enough to do in the markets I'm in. I don't need to be going out buying things. And therefore I don't need the public currency. So why would I deal with the headache? However, if you feel you're tapped out in your existing markets and you want to enter new markets or you need to augment through acquisition because of the regulatory environment in a certain state, then it's very different. And all of a sudden you're putting yourself at a big disadvantage if that's what your strategy is. So, those that are looking to build through acquisition, I don't think really have a choice. I think they up there. But those that are just looking to execute on their plan and are well funded in the private setting are quite happy to keep doing it because their strategy is not M&A right now. If that changes, then all of a sudden it changes. And, I actually think you might see some of these companies create, merge together on the private side and create much more significant scale amongst private operators. And then that's how they'll ultimately, and it'll be more like merger of equals than, true buyouts. And so that's one trend that we think we'll see. But again, that sort of depends on the avenue to go public because it's not as easy to do so in Canada and it's expensive and time consuming. So
that makes sense. And how about the SPAC market? We've obviously seen like in other traditional capital markets, cannabis has raised a lot of capital in the SPAC markets. We've seen some deals get announced and closed. So we'd just love to get your thoughts on the SPAC market more broadly.
Yeah, I mean, the broader SPAC market outside of just cannabis, and I've done a decent amount of work on some deals in that in my prior life, Houlihan. And obviously the SPAC market was white hot through really Q1 of this year. And it's gone completely dead since, despite record issuances. And the cannabis market in SPACs has kind of been the same. You've seen a bunch of deals get done that have been super successful. You've seen a couple of deals that we'll see if they actually get there. But and then there are also, I'm sure some deals in the background that are trying to be had because there's still cannabis focused SPACs out there. And it really comes down to understanding what the SPAC tool is. The best explanation I've ever gotten in my career is to look at a SPAC as a Swiss Army knife. It's really not an alternative to an IPO. It's really to sort of solve a problem for you. Whether that's being an over-levered balance sheet or having to buy out minority shareholders or some other complications to going public, which i.e. having to go through the IPO process on the CSE is one. It makes sense, but without a real pipe, it's really tough. And so you see a deal like Parallel with a committed pipe, and that gets done. You see other deals with much smaller pipes or non-committed pipes, and it's much more challenging because people get to vote with their dollars, and they have the option to just take the money back. And if there isn't enough cash in the account, you can't close. So it's still going to be relevant in the industry, but what I kind of tell people is it's not for everyone.
Yeah, that makes sense. And just to give some background to our listeners, if they're not familiar with how SPACs are structured, what it typically means is a SPAC will have a certain dollar amount, say 200 million committed to it. But those underlying SPAC investors, once the deal is announced, have the opportunity to either keep their capital in the SPAC or to redeem that cash and not end up investing because they don't like the specific company or they don't like the terms of the deal or whatever it may be. And so typically when you have a SPAC, you'll raise a PIPE behind it, which stands for private investment in public equity. And so the PIPE is used to really help to account for those redemptions, should they be higher than expected, to make sure that you're still funding enough cash onto the company's balance sheet. So I'd be curious, Sarah, I mean, how have you seen the fundraising landscape for PIPEs develop over the last few months, especially as the market's cooled off and the PIPEs don't necessarily offer that same type of redemption provision that the SPACs themselves do?
Yeah, it's a complicated tool for sure. So
yeah, sure. And then circling back to the Safe Banking Act, which you mentioned earlier in the conversation, would love to get your thoughts on, what do you think are the likelihood that the Safe Banking Act would get passed during this congressional session? And what do you think the actual implications would be for the cannabis industry and the capital markets environment?
sure. Yeah. I've seen enough politics in my life to not handicap what will get done or won't get done. What I would say is it should get done. There's no reason it shouldn't. And I think, to be honest, the impact would be more symbolic in terms of helping the industry as opposed to actually solving people's problems. And part of it depends on what actually gets passed. Safe banking at its core is really just to protect deposit, institutions, to be, not worried about AML and that kind of stuff. And that'll certainly help a lot of cannabis operators. I don't want to poo-poo that, but, safe banking at its core is not just going to open up US listings. There's been a lot of talk about capital markets inclusion, and, Lord knows I've been laser focused on this, and I can't get anybody to explain to me exactly how that's going to work. The best explanation I've gotten is, there might be some loopholes that get opened up through safe banking to allow people to list. And absent that, I kind of just see it more as symbolic that the two political parties in this country are at least close enough united to advance the regulatory environment for the sector. But until somebody actually gets to list publicly, or we actually see an increase in access to capital from it, because it doesn't necessarily have to be US listings. It could also be institutions saying, this is okay, but nothing in safe banking directly solves it. And that's always the issue in cannabis. It's like everything pushes risk down a little bit, but nothing eliminates it. And so what it'll do is it'll allow some people to cross the fence a little bit, but it's not going to knock down the fence.
Yeah,
in my
opinion. Makes sense. Yeah. No, I think that's similar to our view internally, is that, it'll be a great symbolic win, but from an actual practical standpoint, it's not going to open up the NYSE or the NASDAQ to plant touching businesses. It's not going to open up interstate commerce, certainly. So, still going to be a lot of issues to overcome post safe banking. Yeah.
And some of that might not be that bad, right? Because it's important for the industry to continue. The industry has grown up with the guardrails that are in place. And I think the one topic I think everybody can agree with is, if you took down all of those guardrails in one day, that's not good for anybody. It's not good for the employment. It's not good for the small businesses. It's not good for people in certain states. And so it's one of those where you really don't even want that necessarily. There's been too much money that's flowed into assets and created jobs and tax revenues in local jurisdictions that are key, that if all of a sudden that went away, that's not doing anybody good from a social equity or a local tax jurisdiction funding perspective. So
totally. And I think a perfect analog to that is, you look at what happened in the hemp industry, right? With the Farm Bill getting passed at the end of 2018, you saw an explosion of growers, an explosion of brands, which led to a plummeting in the price of biomass. Obviously, the FDA not issuing guidance yet has been another overhang, but still, we view in a lot of ways the THC market and the supply chain to be much more established, because you have such strict regulatory barriers and capital intensive needs that you inherently are forced to create very well established, well capitalized players to really, drive the industry forward.
Yeah, exactly. I mean, they're barriers to entry right now. But there's also enough competition such that, that's one of the issues you saw in California. It took them, it was sort of overtaxed and overregulated such that people wanted to keep buying, marijuana products from their local drug dealer because it was cheaper and more efficient, right? And so it's important for the states to set these companies up to be successful, because you want successful enterprises because it gives healthy employment, it pays local taxes, and all that good stuff. And so it's got to be done the right way. And so, exactly. The hemp industry is a great example. But just imagine if the hemp industry was able to incubate for 5 to 8 years, and then all of a sudden the Farm Bill ripped it all down. Obviously there was a hemp industry before, but not nearly to the same scale that it is. It would do a lot more harm than good, in terms of how things grow up. So
right. Well, great. Well, Sam, thank you so much for taking the time here today. So to the extent that there are cannabis companies that are looking to pursue strategic M&A opportunities or fundraising support, how can they reach out to you? And are there specific thresholds or revenue metrics that you typically like to work for with the companies that you take on as clients?
Yeah, look, I mean, we need a certain amount of size and scale, and so we're really more focused on strategic M&A than capital markets. I think, we hope that the market evolves in the next, year or two on that front. But, I mean, we're looking to meet, good operators of scale that are looking to have somebody help them kind of think through what their options are. And so, I would say, from a revenue threshold, companies that are kind of in the north of 20 million is sort of a decent starting point, depending on what it is. Obviously, in the ancillary market, there are some, that are smaller than that have, real, much higher values, in terms of mandates that we can take on. Because obviously, I'm just one banker in a broader firm, and we've all got ecosystems we got to play in. We kind of, our jumping off point is, really enterprise values, north of 50 million. So you kind of got to get to the 20 million revenue to roughly kind of get there. But obviously companies grow into size too. So it can be a little broader that way.
Sure. Fantastic. Well, Sam, thanks again for taking the time here. This has been a super fun discussion for me, and would love to continue it again at some point.
No, absolutely. I mean, this is a fast changing industry, so it's great how to have these types of conversations, and appreciate you having me on. And this is all great dialogue, and we could be talking at the end of the summer and it's a totally different landscape, which is exciting.
Yes.
Look forward to it.
Yeah, no, that's a great point, Sam. So for everyone, this is May 25th, 2021. I'm sure everything we've said will be completely dated within 2 to 3 weeks, but hopefully relevant at least for today.
Awesome. Thank you.
Yep. Thanks so much, Sam. Have a great rest of your day.